see some of you guys. It works so much better when I can see humans uh, at the same time. And sometimes it works and sometimes it doesn't. Um, but I'm going to go ahead and get started. And here we go. Navigating homeownership, and I'm just glad that Kelly, go ahead and press record. Then, for my own purposes, we record it and we try to get some sound bites out of it when people have questions too. So you can definitely put some information in the chat, and then Kelly will monitor the chat as we go along. But the navigating homeownership and a path to homeownership, I definitely see that there are some realtors on the class, which is great. And I'm going to get your input. Glenda Petty, I haven't seen you in a long time, so that's awesome. And then also any of the prospective buyers, if you've got questions as we're moving along, if I'm going too fast, please, just give me a heads up and let me know. Again, that's why I have Kelly monitor the chat so that that way we get your questions answered as we kind of move along. So we want to be able to provide you the guidance to go through the home ownership process. We won't be able to cover it all today, but we will be able to cover quite a bit. One of the things that we always provide is a little bit of a disclaimer. So we do business with everyone. We do business with title companies and with with um, uh, surveyors, all kinds of companies. And so when you're doing business with all those people, we're affiliated with them, but we don't own them. And so we do like them to play nice and act nice. And I've done business for so many years. I don't even want to tell you how long I've done business with Laura Taylor on here. And back in before the last market crash, we had a situation, couple of deals where somebody was manipulating appraisals. That's way back in the day, and we don't like that. So we just have to put the disclaimer there, and then the first thing I always show is one of the things I try to show is that my house. So when I was born in Dallas and I was raised in Arlington, and this is my childhood home. And that girl there in that picture, I would say a lot of things. I would probably tell her not to kiss the boy behind that tree, not once but twice. I would probably recommend that was probably not a stellar idea. But my parents rented my childhood home for 19 years, and it's not that it was a bad thing that they rented my home for 19 years, but when you calculate the amount of money over the course of how many years, it mathematically works out to about $496,000. And I can assure you that when that's a most recent picture of that house. So I can definitely assure you that they could have bought that several times over in that time frame. And I always tell people, or I always ask the question, um, when's have you ever had to share a bathroom with a sibling? And this is the most recent picture off realtor.com, and that is actually what the bathroom kind of looked like. Actually, that's the same bathtub and everything. And this is a house, like I said, in Arlington. And I share, I'm doing a recent rehab of my house in Flower Mound that I've owned for 20 years. And I told my husband we were going to get lime green tile. So he's all excited about that. So no, kidding, totally kidding. Um, but I just show these slides because we all have to start somewhere, and it's a stepping stone into the next thing in terms of purchasing a home. This is me outside of mortgage, my husband Ben, and then my daughter Landry. And Landry, if you've got kids, then you know that time just kind of goes by really, really fast. So Landry is almost 11. On November 1st, she turns 11. And I feel like it was just yesterday that they brought her to me. And I signed a bunch of papers and they left. And she was 12 months old on that day. So she's crazy and plays lacrosse. So I'm kind of a lacrosse mom. Then just a couple things on certifications. We do any type of purchase mortgage, conventional, jumbo, first time home buyers, seasoned buyers. I've worked with big banks, mortgage companies, Texas State Affordable Housing Corporation. Our team has been in the top 10 for about 8 years in a row. We love our veterans. VA loan is a very good loan to utilize. This is a podcast on credit. So if you want to take a picture of this screen and utilize it later, you can. It's a half-hour podcast just on just related to credit. So that is something that I think a lot of people have questions on. I think people come across with questions in relationship to credit and they think that, oh, I have bad credit. And so then when you talk to people about their credit, sometimes what you say is you're like, why do you think it's bad? It's bad because I paid my electricity bill late. It's bad because I did this. Well, sometimes what you think is bad isn't even reported. And then I have the other end of the spectrum where sometimes people think that their credit is actually good. And then you find out that it's not good, that they've paid things late consistently. So you don't know until someone looks at it and tells you what to do and guides you through the through the process. So this is a good QR code. It's a 30-minute podcast, and I think you might enjoy listening to that. Rent versus buy and comparing the costs. I just tell people that it's a good rule of thumb is just to try to compare what the cost will be. I know this that your property tax and your interest on your mortgage loan, no matter what the interest rate is tax deductible. So your rent 100% is not tax deductible, but the property tax and the interest on the loan is tax deductible. So you need to think about that when you're trying to measure rent versus buy. And so it's just something to consider. And what we say is stop paying your landlord's mortgage, start investing in your future. So topics that we're going to talk about today is should I consider buying a home? Am I able to buy a home? How do I get started? What's the path from loan application to home ownership? And those are kind of the things that we want to cover. But again, if you have questions, is there any questions so far in the chat, Kelly? Okay. So rent versus buy, the cost of renting. And I guess the best example that I've already provided is using my parents as an example. Um, over the course of 1 year, if you're using a $1,500 payment, 5 years, 10 years, 15 years. And I always say to people that maybe they don't end up purchasing the dream home initially, but we get started. And I, again, can compare my parents a little bit. My mom now lives in a home, and it was the only home that they have ever owned. And my mom now is 82 years old. And so what I just tell people is uh that that sometimes you end up starting somewhere and maybe that's the home that you stay in. I've been in the same house, raised my daughter, gotten married, and I've been in the same house for 20 years. That's kind of unusual because a lot of times people move about every 5 to 7 years. I don't know, Laura, if you agree with that, but but yeah, so they about 5 to 7 years, and because maybe they upgrade, maybe they buy something bigger, maybe their life changes. What I was this morning, I heard an economist from National Association of Realtors speak, and one of the things that she talked about was the demographics and some of the demographics of people lifestyles are changing, and it was talking about the baby boomers and where they're headed in terms of age and how they're going to change their lifestyle, and it was talking about in the next 5 years, people that are turning 30 years old, the millennials and stuff, of where they're going to be in the housing process. So you marry the house, date the rate. And what you want to do is be able to jump into the market so that again the rent versus buy cost of renting screen that you see here. You don't want to over 15 years look back and you've spent $270,000 in rent. Historical mortgage rates and the length of time. Obviously, you can't turn on the news without them talking about mortgage rates. Like you can't. It's inevitable. Every time you turn on. But I think everybody that needs two things. People buy real estate so that they have safe shelter, a neighborhood for their kids to play, a neighborhood or a yard, fenced yard for the dog, and that is going to be consistent. Our life is going to be consistent with that. I recently spoke at a town council meeting in Flower Mound in regards to a development. I spoke the other night, And I one of the questions that was asked was, why was I in support of a development that had apartments? And I'm, as a mortgage professional, obviously I'm not doing a mortgage on apartments, because it starts somewhere. You have a history of rent, you have a history of being able to pay rent, leads you to be able to be a homeowner. And we want people to stay, in different area. We want people, I live in Denton County, so they want people to stay in Denton County. We do great deal of business in East Texas. We want people to stay in Angelina County, Nacogdoches County. And so we try to do our best to be able to get them to understand that, and understand rates. Rates change. Just because you're signing a note for a 30-year fix doesn't mean that's the note for 30 years. You have the ability to refinance. My mom, we've refinanced her house, and if she's known anybody for more than 5 minutes, she has shown her granite countertops. So we've rehabbed it. We've done all kinds of things. Rent versus buy. This is just home value over time. And since we have a couple of real estate agents on the call, maybe you could speak to this for just 1 second. Glenda, I don't know. I saw you on camera earlier. I don't know if you're still there. Um, but if not, Laura, maybe you could speak to that, because traditionally our home values, we don't have that issue here.
Yeah. Yeah, it always increases. Like even my own house, what I bought it in '05 for 250, and then it's worth 550 now. So that's crazy, you know?
Yeah, it's crazy. And I know she has a great rate on it, so she won't be
Yes.
able to refinance. I don't know why I know that, but that's another story. So, Glenda, talk about your area. You're in a completely different area of Texas. You'll have to unmute yourself.
Right, right. Well, we've had a really steady climb. Last year was phenomenal.
Yeah.
The values just went up. We're leveling off now, but they're still up.
Yeah, they're still
They're still
up. So we don't in Texas, we don't see a decline. There's a lot of people moving to this area, and that keeps our growth and our values to continue to improve. Glenda, you primary work, would you say that your primary area is Angelina County?
It is right.
Okay,
Buyers and sellers both.
both. All
Um,
right.
but yeah, the values are great. And
Yeah.
I know, and back in '08, this area just leveled out. We didn't have a real drop. We,
Right.
we, we maintained really well.
So the value's maintained. So even even when you're using a rate, what this slide explains and shows is that the annual appreciation over the course of 15 years. And I always make this comment because I can tell you the house that I own in Flower Mound has the appreciative value of my house. I wish my 401k looked like that. I wish my 401k would do that. It's not the same thing. So real estate is still a great place to invest. Am I able to buy a home? These are the factors that will impact being able to purchase a home. Factors to consider: credit, down payment and closing costs, debt to income analysis. So we're going to kind of unpack it on these topics, but specific related to credit, there's all kinds of programs for all kinds of situations, and everybody's situation is different. So one of the things I always say is that people always end up in these conversations, well, my friend at work or my friend at church, and no one loan that I have ever done in 20 years has looked the same. Not one loan has ever looked the same, because everybody's situation is different. Their debt and what they owe is different. All their debt to income is always different. So everything is always just a little bit different. And so I just tell you, it's an individual sport, and allowing a professional to kind of take a look at it and just kind of see. And as a traditional rule of thumb, there's programs for less than this, but what I tell people is that really, to be able to qualify for a conventional loan or any loan that has assistance, it really needs to be a 620 credit score. What we do is we run all three scores, we throw out the high and the low, we go with the middle score. So really, it needs to be a 620. Now, having said that, do we have a program or an FHA loan that would go down to a 560? Yes, we do. but that is also going to be a higher risk loan, which would also be a higher rate. So I just tell people, I really think the best, uh, and I don't call it a goal because we really want credit scores higher than that. But really, if it can be a 620 or better, we have a fighting chance to qualify for pretty much whatever might work within the parameters of your debt, your income, and so forth. Factors that affect your credit score. This is probably my favorite slide in the whole presentation. Factors that affect your credit score. 35%. Listen to me now. 35% is your payment history. It never goes away. 35% is your payment history. So if you pay things late, consistently late, do you think that the lender that is going to be giving you a mortgage is going to be excited about lending? Probably not, because it's consistently late. So paying your debts in a timely manner is absolutely crucial, hands down. Keeping your account balances low compared to your overall approved credit limit. So when you're young, you get some credit and some credit cards, and sometimes the limits are lower, like $500 or $1,000. If you go and you max that out, if I'm trying to think of a store like Target or Kohl's. I love Kohl's, y'all. I'm telling y'all, I love a good Kohl's day. So if you go and you max out your card, if your limit is 1,000 and you go spend $950 on that card, and you go and pay it off, okay. But if you continually keep all of the credit that have available and accessible to you at the max, that is going to impact your credit score. That's going to bring down the score. I always get this question about inquiries. People will call and they'll say, well, is it a hard pull when I'm looking to see if I can get qualified for a mortgage? Is it a hard pull? And the answer is yes, because we got to be able to look at everything, but that one pull does not impact your credit. It's multiple inquiries. So what happens is you went to the mortgage company to get some information about your credit, and you got an inquiry there. And then you went to Target, and then you went to try to buy a car. They're all coded differently, and it's those multiple inquiries. And the system goes, oh, wait, they're trying to get a bunch of debt real fast. And then what happens is that's what brings down the credit. Multiple inquiries can negatively affect your credit score. Good management of revolving credit, longer credit history can increase your score. So sometimes people will have something, they'll say, well, I'm not using that card, so I'm just going to cancel the account. No, don't do that. Stop. Yeah, don't want to cancel. You want to have a long history. A long history. Maybe you don't use that, but the longer the history of you having that credit, the better off you're going to be, because it just it shows that you have, a history of credit that you've been responsible with. So it's one of my favorite slides. Credit types. You want to have different credit types, installment, revolving, those things, new credit, stuff like that. Any questions, Kelly? Are we good? Okay. How much money do I need for a down payment? And FHA, conventional, VA, USDA. So FHA, the minimum down payment for FHA is 3.5%. Recently, I was doing a presentation for communities and schools of the Dallas region. We're a preferred lending partner for their 15 school districts. I love working with them. And in the crowd, I asked them a question. And the question I asked was, what's the minimum down payment? There's 150 people in the room. And I said, what's the minimum down payment for conventional? And the majority of the room said it was 20% down. And I almost fell over, because it's not. So the minimum down payment for conventional, especially if you're a first time home buyer, is 3%. So 3%. So just for easy math, I know it's different everywhere. So please don't, freak out. But if you think 3% of a $200,000 purchase is $6,000. So that's the minimum down payment. And we're going to talk about, you can make that minimum down payment with an assistance program if you qualify. You can make that down payment with gift funds. If you have a family member that's gifting money, you can do that. Um, and you can save, and you can have even second form of income, like this time of year a lot of people will get a second job, and maybe we don't use that as far as income, but you can use it as assets. So 3% is the minimum. A lot of people with conventional will do 5%. If you do 20% down on conventional, then you do not have to pay mortgage insurance premium. Mortgage insurance premium is part of your payment if you don't have 20% equity. A VA loan. A VA loan is hands down one of my favorite products. In Texas, 15% of people that are eligible, less than 15% of eligible veterans are using their VA benefits. And we don't know why that is. And we try to get the information out. I think a lot of times when I'm talking to a veteran, they're like, oh, I don't want to deal with the government. And we do it for them. And our team, we order the certificate of eligibility. We hold their hand through the process. We do all that for them. But 0% down payment if you're a veteran, no mortgage insurance premium, so it's 100% financing. USDA, I just started doing, I hadn't done USDA in a while, hadn't had someone that qualified, and I love some USDA. They're fast now. I have a specifically assigned underwriter that is specific to USDA, and I absolutely love her. She's fast. She works directly with them. It's great. So 0% in a rural area. It is property specific. So used to be, Laura, remember when Weatherford was USDA? Yeah, not anymore. So there are certain areas or surrounding Weatherford that are still USDA, but now, and Kelly just gave you the agricultural website. So we'll plug in the address. I have a lady right now that qualifies for a USDA, and she's purchasing in the Sherman area, and so we kind of narrowed it down for what she would qualify in that rural area. Closing costs and prepaids. In addition to the money needed for down payment, there are other costs to consider. These costs can be paid in three ways. The borrower, obviously, if you're borrowing money and there are costs to be paid, we can use your funds. We source those funds. It's real important that we source those funds. Lender paid. Sometimes lender has the opportunity to participate in paying a few items. We have a program called America's Finest. And America's Finest is a program specific to Premier. If you are service, if you're a veteran, a nurse, a firefighter, any police, anything service oriented, then the lender will participate in paying $500 towards your closing costs. So that's a lender paid fee that we'll pay. And then there's seller paid. So we went through this period of time where sellers were not contributing, right, Glenda? Right, Laura? They were like not contributing. Well, it's shifted a little bit. Now the sellers are a little bit more inclined to pay for a title policy. If they have an existing survey, and this survey is teachers, you're correct, Laura, teachers, firefighters, yes. If the seller has an existing survey and we get that approved with the title company, then we don't have to buy a new survey. And so that's a good thing. The seller might be willing to contribute. We back in the day we used to call it like a carpet contribution, right? So they might be willing to do that, and then that go towards your bottom line. What is involved in closing costs, lender cost, origination, the closing fee, the title company, they close the file. We do get an appraisal. Those appraisal assesses the value of the property, your title insurance. All the realtors that we work with excellent title companies. Recording fees are the deed of trust and the note that's recorded with the county. And then prepaids. Prepaids are, we collect 12 months of insurance, homeowners insurance, make sure the property is insured for 12 months. And then the escrow is your payment, principal, interest, taxes, and insurance. So we'll escrow 3 months with taxes and insurance. And then the daily interest of your loan. These are all prepaids. If you close in October, for example, if you're closing a loan in October, and we have several, you won't have a payment in November, and then your first payment will be December 1st. Things that are paid outside of closing, typically is you'll inspect the property. I know that's a big thing for Laura. Everybody tells everybody they need to inspect the property so they can see what's going on with it. And you'll pay the inspector directly. That has nothing to do with the closing disclosure at the end. And sometimes, but outside of closing, we'll pay for a survey. Possible sources for down payment. We have to source the money. We can't show up to closing with a paper bag with some cash in it. That's not allowed, right? I'm kind of being funny, but you would not believe. Uh, so, checking and savings accounts. So, we source all accounts that are going to be related to the purchase of that home. Checking, savings, 401k, anything like that, that we can show reserves, or if you're going to have gift funds, then we'll create a gift letter, and the transfer, we'll educate everyone on the transfer of those funds. Typically, when someone's getting gift funds, I have them wire the gift funds directly to the title company. The other possible sources for down payment, I've had people that have a life insurance policy, and the life insurance policy that they got, that their parents had bought for them when they were very little, that is just a life insurance policy that isn't gaining any interest or any value, and it might be a couple $1,000s that they got when they were just a baby. So they find that you can cash that in and use that for down payment. We love down payment assistance programs. We're great at them. We love them. One that I use most often is the Texas State Affordable Housing Corporation. That is the website there, tsahc.org. If you go to that website, you can even do an eligibility quiz. And the eligibility quiz will tell you if you qualify. It will ask you a couple questions. You'll put that information in.
There is a question in the chat
Okay.
about checkings and savings. Like how much it says, how long does the money have to be in the account?
The preference is that the money is seasoned into the you mean like if it's gift funds, if you've opened up a new account, it has to be seasoned for 60 days before you close. That's our preference. Does that answer the question? I can't see the chat at all, so I don't know.
Um,
Yes.
was that asked by you, Laura?
Yeah. So
Okay.
yeah. So it's seasoned. We prefer a 60-day season. If you've accepted um uh, if you sold something or accepted money, sometimes that is a 60-day season. I'm going to get into the sale of personal property. So, we all have maybe we've all purchased something that sat in the garage, or maybe we have a spouse that might have accidentally bought a motorcycle and realized that wasn't a great idea. I don't know who that would be, but you can sell personal property as long as you get a bill of sale. So you get a bill of sale, and that big deposits in there, we can use the bill of sale to source. So you can have a sale of personal property as a source of down payment. So I mentioned it earlier, a second job. A lot of times people this time of year will get a second job, and that second job, we can't use it as income, but the deposit of that second job creates assets. So something I recommend, IRS tax refund. Starting in January, late December, January, I start telling everybody, like, if you'll do your taxes and set aside your refund, then that is a great source for down payment. And the last thing I put here, this is not exactly a source of down payment, but it is something to consider. A mortgage credit certificate. You certainly can work with any lender you wish. We do this class, and a lot of people are already working with a lender, but if they don't know what a mortgage credit certificate is, or don't know if you qualify, you should investigate that a little bit more, because it is something that you can use. It is a tax credit on your taxes, and it makes your you can get more. You change your W-4 and increase your taxable income. Uh, so I think that covers that part. I thought I saw something in the chat. Anything? You're muted, Kelly.
I just put the MCC info in
Okay.
there.
Yeah. So that TShack website is a treasure trove of information. Texas Financial Toolbox, that's also a good one too. So here's the question, how much can I afford? Because we get that question every single day. I got a customer that texted me last night at 10:30. I think I want to buy this. What will my payment be? 10:30 at night. So, how much can I afford? Debt to income analysis. What debt to income means is my total monthly obligated debt divided by my income, including the new mortgage payment. So, one of the things I want to talk about is just gets back to like everybody's situation is not the same. So, let's say I have a credit card and my credit card balance is $5,000. What I owe is $5,000. And let's say Laura has a credit card with a balance of $5,000. As a lender, all we're looking at is not the balance. We're looking at what is her monthly obligated payment. Even if she's paying more, what we care about is the monthly obligated payment. So if the monthly obligated payment, her card at 5,000 could be her monthly obligated payment could be 200. My monthly obligated payment might be 150. So debt to income, mine's going to be lower even though the balances are the same. So I just want to keep that in mind. The better your credit score is, the better that rating on that card is going to be, and the lower the monthly obligated debt is going to be. So in this example, this is a combined monthly income of $8,000, and $8,000, 45% debt to income ratio would be $3,600. 45% of 8,000, $3,600. Why do we use 45%? Because as a general rule, when we're looking for a loan approval, that's a pretty good barometer to go by. So in this example, 45% debt to income of 8,000 is $3,600. So let's unpack that for a second. So if my monthly obligated credit card payments are $200, and then I have a car payment, my car payment is $300, which these days I have seen some serious car payments. Two things that hurt the young people the most, car payments and student loans. So car payment 300, student loan 400. So the total monthly obligated debt is $900. So again, 45% debt to income ratio, $3,600 minus $900. So then what is your monthly allowed housing payment? Principal, interest, taxes, and insurance, $2,700. So then we figure out what that, if it's $2,700, it has to be $2,700 or less. So then for the area that you're purchasing, then we have to determine what the purchase price is going to be that you qualify for. And every area in Texas is different because the school zones are different, because school taxes are different, because property taxes are different, and homeowners insurance and things like that. So that is kind of a good pie chart that just shows you credit card, car payment, student loan, and housing, and debt to income ratio as trying to understand all of the income that's in the household. If they're on the loan, we'll count it. If we're just counting one person's income and one person's credit, we're just going to count that and try to qualify for conventional. That's usually our rule of thumb. Any questions? So I got about 10 minutes, so I'm going to go through the rest of this. What's included in my monthly payment? Principal, interest, taxes, and insurance. The principal is the amount the borrower bought to purchase the home. The interest is the percentage of the principal based on the interest rate. The taxes are your property taxes, and the insurance is what protects the house. And you have to have insurance, right? So insurance protects the house against fire, you know, any of those catastrophic things that you need homeowners insurance for. Now, what's not listed on here is mortgage insurance premium. So if you don't have 20% equity, you will also have principal, interest, taxes, and insurance, and mortgage insurance premium as part of your payment. How do I get started? Typical items that we ask for in the pre-approval process, we'll ask for pay stubs. Sometimes we'll ask for 2 years tax returns. If you're self-employed, you have to have 2 years tax returns in that capacity if you're self-employed. We'll ask for W-2s. We'll ask for 1099s. We'll ask for a photo ID. It has to be current. It can't be expired. Usually a driver's license in Texas, but we also passports, things like that. uh, Most recent 2 month statements, or we also use a program called Account Check. What we do initially is we ask people just do the online loan application, and the online loan application is going to walk you through the process. We ask for a 2 year history of employment and a 2 year history of where you've lived. It doesn't have to be at the same place for those 2 years, but we do need to know that information. Um, and these all can be uploaded into a portal when you're doing the application. The last thing I want to say on this screen is day one certainty, account check, and work number. We utilize these wonderful verification systems so we don't have to ask for as much paper. If you are currently working with a lender and they don't know what day one certainty, if you ask them, they are not using day one certainty, they're not using account check or work number. I'm just being nice, but you need a different lender because all of those things are helpful and automated into our system and allows us to be able to literally underwrite in 24 hours. So here's some caution for you. During the loan application process, it's important to understand certain actions can affect your ability to remain qualified for your home loan. You want to talk to your loan officer before you do these things. I just had this happen this week. Yay. Do not change employment. When we've got approval, you're under contract, we don't want you to change employment. It's not a good thing. Significantly increase credit card balances. So it's exciting. You're under contract. You see your future. It's going to have a lot of furniture, and then you run to the furniture store and you charge up $5,000-$10,000. That's never happened to you, me, and Laura ever. No, never. So please don't do that. Reduce your asset balances. Just decide that you're going to loan money to your sister because she needs it, and we're in the middle of the process, and we've already verified how much assets you have. Don't do that. Fail to disclose all debts. Here's the thing. We're going to figure it out, right? We run Cavers, which is a system. We run things. We're if it's not on the credit report, we're going to still figure it out. Don't let it be a mystery. Well, sometimes the failed disclosed debt is if you owe child support. If you owe child support, just tell us. Allow us to be able to help you. Don't apply for new credit when you're in the middle of qualifying for a mortgage, because if you apply for new credit, we're going to know because it's going to send us an alert that there's a credit inquiry. You don't want to make large undocumented deposits. I was getting ready to close a loan, and the father-in-law decided to help them, and he wired funds into their account even though we were kind of done with the loan, and we got a last statement, and all of a sudden there was this huge large deposit from the father-in-law, which wasn't a gift, and it was a foreign wire transfer from Colombia. So don't do that, So, because then I had to explain it. Yes, now I did get it explained, but it was challenging. So we don't have undocumented deposits or things we have to explain. Don't change banks. We were doing a loan for two sisters recently, and they were moving money all over, move money from one account to the other. Please don't do that. And the last thing is, we're all well-meaning. We love our kids, but don't co-sign on a loan if you don't have to. Don't co-sign on a loan for your friend because you're obligated. If they're not making that payment, it's going to impact your credit. You're obligated. Having your own realtor is so important. This is like my last thing I want to say. And I certainly welcome Glinda and Laura. And I don't know if anybody else is a realtor that's on the call today, but realtors help. They help, and maybe ladies, you might want to jump in here and just speak to why this is important. You got to have a realtor. When I get contracts that are for sale by owner and they don't have any guidance, it is so challenging for the lender and it's so challenging for the title company. So maybe a minute, Laura, and maybe a minute, Glinda.
I always, you don't want to overpay for something or have the appraisal come in low. So we always run comps and, before we tell you a good price to offer for the house. But also the showing, making sure you get in and out of houses, and I can't
Safely.
imagine some of the scheduling's challenging. So, because, some owners have crazy limitations on it, but there's a
Right.
lot we do. I don't know how to cover it all.
Oh, I get it. What do you think, Linda?
Well, another thing is they may not realize after we're under contract and have a 10-day option period, then we can negotiate repairs. So just because we came in with the price doesn't mean we're sticking with that price. We can have concessions or they can actually do the work. So that's something that you might not think, that your realtor is so valuable. We're free, actually.
Well,
Yeah.
for the buyer,
Yeah,
right? The seller's
always-
paying paying for your services, for
That's
sure.
Right.
That's
And
right.
here's the thing. I always say this, you have a license. You have a
Yes.
license. It's not an emotional thing for you guys. You're going to take the emotion out of it and it's just business. And, from the lending perspective, I always say it's like, like having a license is like being a doctor, like where, you're the doctor of real estate for that moment, the doctor of mortgage for that moment. And you don't want to do it yourself, even though I can go on YouTube and look at a heart surgery and learn all those things. I'm not going to want to do it on myself. So this is a contract. And I think that's the gravity of that is I've had to have a conversation with a customer recently who was, not grasping the gravity of that. So you're going to be in a contract. You have a contract to purchase something. So you need a professional to help you. So a lot of times when I'm talking to people and I pre-qual them in advance and they don't have a realtor, I'm going to put them in the hands of somebody that knows what they're doing if they will allow me. And a lot of times it's always struggling to me when people come back to me and they go, well, I want to use this lady at my church. That lady at your church is very well meaning, but does she do this every day? Because I know people do this. This is what they do, 24/7. It's not a hobby. Real estate shouldn't, it's not a hobby, so that's how I look at it. They're going to help you find a perfect home. They're going to explain each part of the contract. They better explain each part of the contract. They're going to negotiate, present the offer, schedule, guide inspections, and communicate with the seller's agents, title company. Laura and I are in the middle of a deal right now, and I was driving down 35 coming back from a housing connection conference, and I called her and I'm like, hey, can you figure out what these sellers are doing? Because we've got like several, it's an estate, right, Laura?
State.
It's an
Yeah.
estate. So we have a lot of sellers. So I'm like,
Mhm.
I can't unpack that right now because I'm on
Yeah.
I-35 cussing at the traffic. And, and so she jumped right in and she emailed title and let them know. And I saw they responded. I hadn't read it yet. So, but yeah, so we all work together. It's a partnership.
Mhm.
From contract to closing, you're pre-qualified in advance. We have a purchase contract. Within a few days of that, we're going to do a loan estimate and what we call initial disclosures. Those initial disclosures, you're not signing in blood. I'm not getting a DNA sample. I'm not going to ask for your firstborn child, but I do need those signed so we can order other services. That may be a time where we lock the rate. Sometimes we wait until we get an appraisal back. We go through processing and underwriting, order appraisal, order title search, set up hazard insurance. And so there's a lot of times it's hurry up and wait. You guys are busy, 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 get them under the contract, and it's kind of like dead space, like for 10 days. So we're ordering services. Kelly on our team orders all the appraisals. So she ends up having to have all these really pleasant conversations when they don't show up on time and all that stuff. So we're on top of that. But we get everybody's pre-qualified or pre-approved in that regard. Then we're finished. Closing disclosure is issued, and then we have to wait 3 days. So if a closing disclosure goes out on a Tuesday, you can sign on a Friday. So we wait the 3 days. Then you have closing day. This is something I really want to say about closing day because I've worked with people that are like, "Oh, we're closing on Tuesday? Well, I work on Tuesdays." And we know that, but the title companies also are only open during business hours, just like your doctor, just like your dentist. They're not going to sign at 8 o'clock at night. So we have to make arrangements for that with work and things like that. And title companies are very flexible. They'll sometimes come real early. I know they are in the area where Glenda works, and they'll be flexible with people to a point. But you do have to make a plan for closing day because you have to sign the documents, and the documents have to be signed for real, like not I've had people say that. I know we're in the A of virtual. We're doing virtual right now. These aren't e-sign documents because your deed of trust and your note has to be a live wet signature. So that's real important. And then this just gives us information and a QR code about our team. I love it when people follow us on social media. I'm on Facebook, I'm on Instagram, I'm on LinkedIn. I try to have some words of wisdom on a regular basis. Kelly is going to probably give you an email address too as well. And the last thing I always share with people is I was talking about my parents, and they rented that house for 19 years until they finally ended up purchasing a home much late in life. And and I helped them do that. They were not going to do it, and I convinced them to do it. And I was talking to my dad like I'm talking to y'all now, and they'd been only in the house a couple of years. And after that conversation on that day, 45 minutes later, he was gone like that. He wasn't sick. He was 61 years old. And 61, the closer to 61 I get, the younger that seems. When they got in the house, one of the things that for the first month he was in the house, he was like, I think I want to paint this. I think I want to do that. I think I want to do this. And I'm like, Dad, it's not my house, it's your house. And that's when I realized as an adult that he had been asking for permission his entire life. So when I was to hang something. So when I was a kid in that house that I showed you in the beginning, and I was asking to paint my room some funky color of pink, he wasn't telling me no, he was being told no. And so I think about that because we want to really think about where we live, where we raise our kids, and the dream of home ownership. We're putting out a hand. The programs that we do and the things that we do, um, we don't want anybody disenfranchised from the process. We want to give them a hand and bring them into the process. It's a hand up into the process for sure. And my mom, if I hadn't convinced him to buy that house, my mom would still be living in that house this many years later. Dad's been gone 17 years. And again, granite countertops. When my mom's from Marlin, Texas. She was the youngest of 13. They didn't have granite countertops, so she's pretty proud of them. And recently, she's like, I think I need some new carpet. She's like enlisting me for new stuff all the time. So the last thing I share with you is that my mom always said if I speak to a group, virtually or in person, I need to bring them all flowers. Everybody needs to get flowers. And I'm like, Mom, that's not really practical. I don't know if I could do that. And so I found a way to do it by providing people with bluebonnet seeds. So if you want some bluebonnet seeds, Kelly sent you, put an email in the chat. Just send me an email. We'll get these in the mail. And then you can plant some bluebonnets in your area. We'll grow together. If you've got questions beyond what we discussed today, let us know because we're here, ultimately we're here to help and really, just want everybody to have, a great uh, fall season and all of that. And if you've got any questions, are any questions left, Kelly? And Kelly can do one more door prize here. You don't have to put the wheel on, or you can if you want to. If you want to put the share and you'll knock mine off, and that's okay.
That's okay. I'm gonna do also a redraw for Stephen Powell because I didn't see him on the call. So
Oh, okay.
redraw for him, and let's see. Looks like Jackie Olco.
Jackie! Whoop whoop! Jackie, I'm so glad you're on the call. How are you?
I'm good. How are you?
Oh, good. So if there's not any more questions, I'm happy to stay on if there's not any more questions, or if anybody has any additional input. And of the people that are on the call, if you need a real estate professional, please let us know in the area that you need it, and then we will provide that guidance. I feel like I talked really, really fast, but we finished on time. Yes, with a few minutes to spare. So, Glenda, I'm going to be in your area next week on the 12th and the 13th. We are the sponsor of the Lovekin Association of Realtor Lunch next Thursday, and we are doing Stump the Underwriter. So I'm bringing the underwriter manager with me, so that's going to be great. And I'll probably stay at the Fredonia too if you're around. You just let me know. I'll be in the area. And Laura, we're working on Mr. Morgan. I talked to him yesterday. He just loves me. So all good. Everybody good? Oh, I see a question. Can we get a copy of the recording? I can provide some slides. I just can't send the recording per compliance. But I'm happy to help with certain slides or certain questions that you have. Just email Kelly. We'll get that. All right. Y'all have a great day. Enjoy your weekend. It's fall, y'all. It's going to be good. You'll be good. God bless.
Do I need to do anything if I won something?
If you want something?
If I won.
Oh, yeah. Shoot us an email. Kelly will put my email address in the chat again, and we need an address, which we probably already have, Jackie, but still send that to us.
Okay, I will.
All right.
Thanks.
Y'all have a great day.